Hello, everybody. Welcome to Monday. The S&P 500 was up a little bit more than 1%. It's a really good day, actually, especially after last week. A couple days last week were down pretty heavy, and then all of a sudden things started to turn around. Got the jobs report that came out on Friday. Market really jumped on that because it was a little bit less than expected, but still a good number of jobs. And so now there's some, more hope that maybe rate cuts will be coming and those types of things, because inflation's one of the biggest stories. But really, if you look at the chart and you look at what's been happening, we've been having a nice kind of recovery here from the downturn that we had during April. And we're just starting to see, continuation of that. Matter of fact, we've had the best 3 days in a row that we've had since last November, when November went crazy. It was up 8.9% for the month. So good market. Things are very powerful, actually. We came down about 5%. Usually it'd come down a bit more than that because they kind of create some damage and things come down. It would fall down to some support level. The fact that it hasn't come back down and is showing signs of maybe getting all the way back up to a new high is because of the strength of the market. A lot like what we saw in 2021 when we would have these little 5% downturns and then the market would turn right back around. So again, expectations are, hey, earnings are still good. Beating earnings has been happening on a regular basis. Even the forward guidance is a little soft in some cases, but now the market is starting to recover from that. The Federal Reserve is going to be out kind of in force probably this week talking about, what they're thinking in terms of rate cuts and whatnot. So might cause a little bit of volatility within the market as that happens. But altogether, I think the market's kind of settling in for where things are here this year. Inflation is a little bit higher. The Fed has this 2% target. There's no magic in that. Actually, they've kind of chosen that years and years ago, sort of out of the air. Really, a 2 to 3% target is probably fine, which is right where we are right now. When you look at PCE core, which is a preferred measure for inflation, the Fed looks at is at 2.8%. So, we'll see how that plays out altogether. So the Fed has already started to cut back on the sale of the bonds off of their portfolio. If you look at what happened when they started to tighten up money supply, the first thing they did was to start to sell these bonds on their portfolio. And then they started to raise rates. And now they're starting to sell less of those bonds. And then the next step will be to, lower rates. So they've got a program in place. So in a way, they're already doing some monetary easing with this bond portion of their portfolio. So altogether, good stuff. We'll see how it plays out, but really pleased with earnings so far. Still have NVIDIA coming, at some point here. So that'll be kind of exciting to see what happens there too. But look forward to seeing what's going to happen tomorrow. Thank you very much.